I know you're wondering who we are. We are the value creators in every sector of the economy, both public and private driven. We ensure good governance through transparency and integrity. So who are we? The accountant.
The Accountant Show, inspiring and promoting an accountable Nigeria.
You are now watching The Accountant Show.
Ladies and gentlemen, you're welcome to The Accountant Show, and I'm your host, Ochiko Akejabo. For those who are wondering what the TV program is all about, The Accountant Show is meant to recognize and celebrate individuals and organizations in the public and the private sector who are on a daily basis contributing to nation's development by taking on strategic decisions and also working in leadership capacity. Now, the mission of the show is to recognize and celebrate individuals working on a daily basis to nation's development. And the vision of the show is to inspire and raise the next professional accountants in the Nigerian society. Today we have a distinguished guest in the house, but before I let you know who he is, we'll go for this commercial break, and when we come back, I'll let you in.
For advert placement inquiries on The Accountant Show, please call 0816 376 3766 or 0818 960 4685 or send an email to valueinquire@gmail.com.
You're welcome back. This is still The Accountant Show, and I'm your host, Ochiko Akejabo. Today we have a distinguished guest in the house, Mr. Adebayo Olumuyiwa. You are welcome to the program.
Thank you very much.
Really honored to have you here. I must say it took the wilderness to bring him here, but we're happy to have you here, sir.
I'm happy to. Thank you very
Sir.
much.
Thank you very much for being here. So we would fast forward and go straight to the real business of the game, which is the impact of Ifrs in 21st century financial reporting. Now, the Ifrs, as you know, is the International Financial Reporting Standards. Okay, let's take away the international, take away the standards. We're left with financial reporting. What is financial reporting? For those who are watching and they're like, what are these people talking about? What is financial report? What is reporting? What is financial? Well, the only reporting they know is maybe a newscaster on TV, reporting for this station, reporting for this channel. What is financial reporting?
Okay. Financial reporting is more or less like the platform in which we have to disseminate financial information about companies to the stakeholders. That is the general public, the regulators, the shareholders, the bankers, the creditors, the management of a business, and etc.
Okay.
And therefore, financial reporting is a tool that is widely accepted today as a means of obtaining financial information in which decisions are being taken. And therefore, what now happened is that before now, we find ourselves in a situation where we have different standards that regulate financial reporting. But due to globalization, due to integration within the international space, there's a need to have a common language. Financial reporting is an accounting language of communication, especially as it regards stewardship accounting. And therefore, that is what gave birth to international financial reporting standards. But the journey was far, far ahead of now. But there was a paradigm shift, if I could say, in 2000 when the then International Accounting Standard Committee metamorphosed into International Accounting Standard Board, who is now saddled with the responsibility of formulating and more or less developing financial reporting standards. And what has been unique about it is that International Financial Reporting Standard is principle-based set of standards. What does that imply? It implies that rather than applying rules in treating transactions or reporting transactions or activities of an entity, you rather rely on more or less the principles whereby you treat transaction based on the substance of those transactions rather than the form of those transactions, which implies that two transactions might look similar, but they might have two different consequences with respect to accounting. And also, it allows management to effectively make decisions such that they understand the impact of every decision they take on the business rather than just working by the rule, which means managers of a business are given latitude in order to take decisions, but only that they need to be guided about the consequences of those decisions. And that's what IFRS tends to achieve. Today, many companies are now cautious about the kind of contract they enter into. Especially with respect to financial instruments. Also, because of the complexities in the past, whereby we have off-balance sheets financing, whereby entities' exposures are not adequately captured within the balance sheet. But in today's world, based on IFRS, virtually all of the exposures that any entity could have, whether by way of commitment or by way of contracts, are all reported within the financial statement. And today, the world is now moving towards IFRS. And of today also, the US and the IASB, that is the FASB for the US and the IASB for other parts of the world, are also talking about the project regarding convergence of US GAAP with IFRS. And today, IFRS is the way to go as an accounting language.
Okay, just as you mentioned the International Accounting Standards Board. That is the board saddled with the responsibility of rolling out these accounting standards. So they update, they change, they render obsolete, or what have you. So this International Accounting Standards Board, are they responsible to a higher body, or they are just the almighty? Is there anybody they're responsible to?
Okay, ISB is more or less like a subset of IFRS Foundation.
Okay.
IFRS Foundation is more or less a body. And IFRS Foundation has its own trustees, has its own monitoring board, and has interpretation committee. Now, based on IFRS Foundation, it's made up of member bodies, countries, international organizations, and also have a relationship with IFAC, which is the International Federation for Accounting. And therefore, IASB also has a reporting line within the framework of IFRS Foundation.
Okay, so you're saying that the International Accounting Standards Board is a subset of the International Federation of Accountants?
No, it's invariably a unit within IFRS Foundation. But IFRS Foundation more or less have its constituents also attached to IFAC.
So, sir, clearing that note, let's bring IFRS to Nigeria now. We're a country that gets blown by the winds of what happens in the UK or in the US or in the Western world in general. Now, we have the whole industry or the whole economy is divided into two, the public sector and the private sector. Now, entities under these two sectors have to prepare financial statements, have to prepare financial reports, and they have to prepare these statements in accordance with the International Accounting Standards or IFRS standards. Now, what would you say is the level of compliance when you look at entities from the public sector, you look at entities from the private sector? How would you rate their level of compliance, sir?
Okay, the first thing we need to take note is this. Private sector or private businesses are to comply with International Financial Reporting Standards, which is IFRS, while public sector entities are to comply with the Ifrs, that's International Public Sector Accounting Standards, which is issued by IFSAB, which is International Public Sector Accounting Standard Board, which is different from International Accounting Standard Board, which is responsible for IFRS. Now, what happened is this. With respect to compliance, therefore, I'll answer it in two folds. Compliance with respect to private sector, I could say, is high compliance. Because in 2012, supposed to be a year of adoption. And there was three-phase approach to it, whereby we have the first phase being the public interest entities, significant public interest entities, while the second phase borders with other public interest entities, while the last phase deals with more or less like the small, medium enterprises and others. Now, what happened is that within that 2012, 2013, 2014, we've had our teaching period and our learning period. And as of today, 2017 account has been majorly issued by public entities, and the level of compliance has been very high. But when we look at the public sector, their own framework is different, slightly different, because public sector was supposed to initially adopt cash-based IPSA, effectively 2013. But there was technical delay, which rolled it over to 2014. And there was also a 2-year window, transition period, to move from cash-based IFSA to accrual-based IFSA,
okay.
which accrual-based IFSA is more or less a replica of IFRS
Okay.
in the public sector.
Okay.
And as of today, many state governments and equally federal government and its agencies are struggling to even comply fully with the cash-based IFSA, talk less of complying with the accrual-based IFSA, except for a few states that are already in the pipeline of trying to more or less meet those challenges. But in a simple way, I would say compliance for private sector is high, while for public sector is very low.
Very low. Okay, you mentioned the states that were, or that are trying to understand and even think of complying with the IFRS standards. Can you mention one or two states that are making attempts to comply?
Okay, not to be political, I may not be able to mention that, but we have some few states that are more or less making serious attempts, while some others are following through, because it requires a lot of resources.
Yes.
1, intellectual resources; 2, capital; 3, commitments and buy-in by the executives.
Okay, sir. Let's go straight to consequences of non-compliance. When we talk about complying. Okay, if we don't even comply, what is going to happen to us? Is the heaven going to fall, or is there going to be rapture, or will there be I don't understand. So people are asking, okay, if it doesn't happen, what happens?
Okay, first, I think the question borders on whether if an entity do not comply.
Yes.
Okay, which is quite different from if Nigeria has not adopted. Okay, there are two different things. If Nigeria has not adopted IFRS, probably won't have experienced the foreign direct investments we experienced between 2012 and now.
Okay.
2, probably the cost of more or less trying to getting investors to understand our own reporting system would also have limited the chances of growing the economy.
Yes.
Also, probably it also will have limited the way we more or less co-integrate with the larger economy, which is the global economy. And that is from the Nigerian perspective. But from entities' perspective, you have no choice other than to comply because it's a legal requirement.
Yes.
Now, for us to have adopted IFRS as a nation, there was a need to have an act which came into effect 1st of January 2011, that is Financial Reporting Council Act of 2011.
Okay.
And therefore, that act make it mandatory. Therefore, the question is, even where the law has made it mandatory, what if you don't comply?
Yes.
Yeah, based on FRC regulation and rules, there are penalties, there are sanctions, there are fines for non-compliance.
Okay.
Because that is the only standard being recognized by our law to a large extent, in which you are expected to report your financial dealings.
Okay.
Even for the purpose of taxes, if you have to file taxes, you are going to be filing IFRS compliant financial statements, because it's not in tandem with the principle of our tax law.
Okay.
And therefore, it means that you have no choice other than to comply.
Okay.
But probably will even fall, that might be a secondary issue.
Okay. So invariably, you're saying the consequence of non-compliance is that you are going to be facing penalties from FIRS, you're going to be facing penalties from FRC or FRS, you're going to be facing other...
Yeah, probably you might be isolated.
Yes, and shut yourself out to foreign direct investments.
You can't even approach financial institutions for facilities.
Definitely, sir. So now you've mentioned, I was going to ask you who was responsible for ensuring compliance. Like you mentioned, the FRC, if I'm correct.
Yeah, Financial Reporting Council is responsible.
Which was established in
by the Act in 2011.
2011. Okay. So they are the ones who are responsible in ensuring that. Do they supervise entities in the public sector and the private sector?
Yes, they are expected to supervise both public and private sector.
Okay.
But the activities over time are more or less focused on the private sector,
okay,
where they perform oversight functions, they review accounts, and they also make some pronouncements where necessary, and provide guidance.
Okay, so do they provide penalties when people don't? Are they like strategic penalties, straightforward penalties that are just spelled out in the act?
Yes.
And say, you don't do this, this is what happens. You don't do this, this is what you pay.
Exactly. It's clearly spelled out in the Act.
Okay.
And therefore, the penalty ranges from minimum amount of money in millions up to maximum amount of money in billions.
Okay. Nobody goes
I think the highest penalty should be like 5 billion.
5 billion. I think some people have 5 billion to throw around. They're
No,
like,
no.
I
No
have
matter
like,
how big you are as an entity, 5 billion is material, even if not to you, but to other stakeholders.
yes, definitely, definitely. But when in a case where somebody has over $1 trillion and it's like, I can just part away with my 5 billion.
Yeah, but it's not just about parting away with money. The issue is also perception.
Okay.
The issue is also reputation. Because when you are doing business, you are not doing it in
Alone.
isolation.
Yes.
Therefore, you have financial institutions that support you, you have creditors, you have international investors and all sorts of things. You also want to be seen to be socially responsible.
Definitely.
And part of it is compliance with what is required by the law.
Definitely. Good, good. So, I would like us to be more specific now. Let's go, let's talk about some specific international financial reporting standards. And I'm aware that you have a book, it's titled Contemporaneous Accounting for Business Combination and Group Accounts. And there's no way we're going to talk about contemporaneous accounting for business combination without talking about IFRS 3, business combination, talking about IFRS 10, consolidated financial statements. And what is IFRS 3, business combination? And what is IFRS 10, consolidated financial statement? What is this all about?
Okay, first, let's talk about business combination. In today's world, there are two options you have in trying to seek growth.
Okay.
It's either you go by organic growth, which means you strive as an enterprise to grow within.
With your resources?
Yes, with what we have within.
Okay.
Or you grew by way of merger and acquisition,
Okay.
which means trying to combine, integrate with other businesses in order to grow.
Okay.
Okay? Now, but the other aspects of merger and acquisition is a complex aspect that requires a thoughtful accounting. Okay. And that's why you could find out that there was a paradigm shift far back in 23 where IFRS 3 replaced IS 22, where we started from. And therefore, what you observe is that IFRS 3 more or less talks about accounting for business combination. Okay. And it sees business combination where an enterprise or probably a business obtains the control of one or more other businesses, regardless of the way it's been structured. Which means the simple language is for every merger and acquisition, the accounting falls within the framework of IFRS 3. Okay. Now, but again, not all business combination result in the preparation of group accounts, which is a requirement of IFRS 10, consolidated financial statement, which means business combinations that end up creating a single entity will not be required to prepare group account because you are just an entity coming out of that combination. But where the combination is such that it creates a parent-subsidiary relationship, where two businesses combine, but they still operate separately by legal framework. Therefore, by legal structure, they will be required to prepare separate financial statements. But from the angle of the substance and the economic reality, they are supposed to be seen as one. Yes. And therefore, having complied with the law by presenting separate financial statements or individual financial statements in compliance with CAMA, therefore, you still have a responsibility by the provision of that same CAMA and also of IFRS to combine the result as if those two entities or more are one. And therefore, that now leads us to IFRS 10, where IFRS 10 now provides the methodologies and the mechanics to consolidating two or more entities under the group to become one. And that has been the position of standards.
Okay. So talking about the Nigerian economy that we are in, let's leave out the entities in the public sector. Let's work on entities in the private sector. And let's concentrate now on the group structure. Entities that have subsidiaries and all. In consolidating the financial statements, what do you think are because you are a financial expert, you are an expert in this field. What are the challenges that you feel that companies that have a group structure background, what do you feel, or what do you think, or what do you know that faces them as a challenge when they try to consolidate, try to comply with IFRS 3 and IFRS 10?
Okay, the challenges borders on the skill gap
Okay.
and also on the fact that IFRS is revolving. Therefore, by nature of IFRS, there's what we call annual improvement and continuous improvement in order to meet latest development. Therefore, the skill gap is a major factor. And secondly, because the entities operate more or less autonomously
Yes.
or semi-autonomous by nature. Therefore, there might not be full integration within those entities where they collaborate in order to track intercompany transactions and also to carry out effective intercompany reconciliations, which are essential ingredient towards consolidating. Because consolidating account of two entities goes beyond just adding
Assets
and liabilities and the balances together or the results together.
Yes.
But it entails you trying to make what will have been the result, given that it's a single entity that is carrying on all of the combined transactions. And therefore, the essence of you eliminating, carrying out necessarily adjustments, and also trying to track those adjustments on a year-to-year basis is always a challenge. And also, based on the fact that in Nigeria, we more or less make use of lean resources, whereby in the ideal world, you're supposed to have a group accountant who is only saddled with the responsibility of ensuring that transactions across the group are adequately captured, ensuring that reconciliations are done effectively, and also responsible at the end of the day for the combination of those accounts. But all of these are just the little challenge, but they are not of greater challenge.
Okay, okay. These group accountants, are there a high supply of them, or are we short of them? If you talk about Nigeria in general, are they in short supply or in high supply?
Okay, it's a conundrum. What I could say is this: we're in short supply.
Okay.
We want to talk about, do we have them available? Okay, because of the skill gap. You understand? Most organizations rely on consultants to more or less bridge that gap, because in this part of the world, we have phobia for some things, you understand? And we have some areas in financial reporting that are seems to be critical or complex, but which invariably they are very simple, but only that they require logical reasoning, and they are painstaking. But we are not that more or less taking our time to study those things and appreciate them. And that's why you could see that many organizations rely on consultants or third-party applications.
Interesting, sir. So, we'll go for this commercial break, and when we come back,
we are open to your suggestions and ideas to better serve you. Please send your creative ideas and suggestions to valuecreator365@gmail.com.
We are back on the show. It's still the Accountant Show, and I'm your host, Ochiko Akejabo. We still have our guest in the house, Mr. Muyiwa. He's here with us, and we just finished talking about IFRS in the 21st century, financial reporting. It's been a blast, and he's still here with me, and he has a word or two for the youths out there, Nigerians out there, and the world at large. Sir, the floor is yours, sir.
Okay, my advice to the youth is that you can become who you want to become, and you should not relent. You should persevere and more or less take up challenges. It's not going to be easy in life, but you need to cross some hurdles in order to make it in life. Just stay committed, stay devoted, continue to more or less plan to achieve things in a manner that more or less will make a difference. And sky will not be your limit, it will just probably be your starting point.
There you have it. We came, we saw, and we conquered. It's the Accounting Show with Mr. Muyiwa on the show, and we just finished dishing out the gifts, and he just talked about, he gave a word of advice for the youths. And this is the part where I wrap up on the program. I would like to say to all our viewers watching the show, you can follow us on social media platforms, Twitter, Facebook, Instagram, and you can follow us or subscribe to the YouTube. The Accountant 360. The Accountant 360. Except for Twitter, the Accountant is a TNT. The Accountant 360. So there you have it. Is the Accountant Show, and I'm your host, Ochiko Akejabo. I would like to say that in everything you do, be accountable. Until I see you again, bye for now.